Hey guys, welcome back to Snowball Investing. This is the September Freetrade portfolio update. As I do in all my videos, I'll be showing you my overall portfolio performance and going through any stocks I've been buying or selling. So let's jump straight into the stocks and shares ISA. The stocks and shares ISA currently sits at £33,788. I did put another £2,000 cash into this account. I'm getting fairly close to maxing out the £20,000 limit of this financial year. When I do max that out, I will be using the general investment account to put extra cash into investing until the next financial year. The portfolio is down by £4,111, which is worse than last month, which was around minus 2,600. This is mainly due to the CPI inflation numbers, which came in worse than expected. As a long-term investor, I'm not overly concerned. If anything, this provides me better opportunities to get great stocks at lower prices. Over the past month, the FTSE All-World ETF continues to outperform my portfolio, where my portfolio is down by minus 8.12% and the FTSE All-World ETF is down by minus 3.8%. On a maximum time horizon, my portfolio is down by minus 14%, while the FTSE All-World ETF is down by minus 5.6%. And this is to be somewhat expected given a large proportion of my stock and shares ISA is in more speculative plays. Let's jump into the individual positions, starting with Palantir. So this sits at just a touch under £13,000 and it's down by minus 17%, which is slightly worse than last month. When we look at the performance of the stock of last month, it is down by minus 17%. But to be fair, most stocks over the last month have been hit pretty hard. So I did invest another £1,000 in this position, trying to lower my cost basis. And I'll continue to do so, especially if it goes under $7. So I wonder just two questions I get quite often around Palantir, which is number one, well, Palantir is going to go to $5, so why are you investing at $7, $8 or $9? And the second one is Palantir makes a very large proportion of your portfolio, which is a negative thing. To address the first point, I actually have no idea where Palantir or any other stock is going to go in the short term. So Palantir could go to $6, it could go to $5, it could go to $4. And actually, I don't really care in the short term. My strategy is to invest in good companies that are fairly or cheaply valued, where I think that I will make a good return on investment on the long term. I think Palantir at these prices is one of those opportunities, although I could be wrong. To address the second point, I think we need to take a step back and try and understand my own investing strategy, journey, and sort of risk tolerance in general. And everyone's going to have their own sort of journey that they need to go on, and that would influence the decisions they're going to make. For me, I'm very early on in my investing journey. I only started investing in December of last year. On my overall strategies to invest £20,000 into my stocks and shares ISA for the next 20 to 25 years. Given that strategy, when I retire in 25 years, my overall portfolio will be worth £500,000 on the assumptions I make 0% profit on any of my stocks, which is highly unlikely, fingers crossed. And at that point in time, Palantir is not going to make a large proportion of that portfolio. As I get later on in my investment journey, my plan is to switch from more speculative plays such as Palantir or DraftKings or any of these other positions to more safer plays such as index funds or even bonds. The last thing I mentioned before I move on to some of these other stocks is we are in a bear market, and bear markets don't come around very often, so I'm absolutely looking to capitalize on some of these great offers in the market. So if you look at the maximum Palantir chart, at its peak, it was trading at $39. And you can make an argument that it was trading quite expensive, which I'd probably agree with. However, if we weren't in a bear market, I'd make the assumption that this stock will probably be trading at the high sort of teens or sort of $20 range. So I'm very comfortable where my average price per share is and where I see this company going in the long term. Looking at some of my other positions, I've got my two ETFs. The FTSE World Index is still hanging on fairly well, only down minus 0.84%. Nasdaq has dropped down a fair bit to minus 9%. Since the CPI report, some of these larger cap technology stocks such as Microsoft, such as Google, Apple, have dropped down quite drastically, and they make quite a large proportion of the Nasdaq 100, hence the big drop down to minus 9%. Next up, we have Tesla at plus 30%, and Tesla continues to surprise me. I think given the strong retail base Tesla has for its stock, it can maintain quite a good price even in downturn in the markets like we have now. Unfortunately, Tesla is trading a bit too rich for my liking, so I'm not going to increase the position, although if the price does drop, I'd be tempted to buy some more shares. We also have Alphabet and Microsoft, which again are in the red and being heavily beat up in the last month. If we take a look at the Alphabet stock, it's down a massive 14% in the last month. It's very close to going under $100, which is kind of crazy to see. I have been buying Alphabet quite heavily in the general investment account, which I'll touch on in a little bit. I've continued to increase my position so far, so I put around £200 in last month, and I love this stock at under $6, so if it continues to decrease in price, I will definitely increase this position. We have Meta, which basically can't catch a break and continues to downtrend quite heavily. PayPal and S&P 500 not increasing positions, just holding as is at the moment. We have Boohoo, which continues to be one of my biggest losers in this portfolio, down 58%. Next up, we have DraftKings, up 17%, and I've increased my position the last month, so I'll put another about £100 into this. Going forward, if the price does drop a bit more, I do want to increase this to a 500 plus position in this portfolio, and potentially even more depending on how the market progresses. Semiconductor stocks like AMD and Nvidia continue to get hit pretty hard, although not looking to increase my position. SL Capital put another £70-80 into this, slowly dollar cost averaging in. I think the UK market still has a long way to go down, so I'm not looking to put too much money in a short period of time into UK stocks, but towards winter and potentially in 2023, some of these UK stocks, in my opinion, may be at better valuations, so I'm holding back increasing positions too much into UK stocks. I won't go through every single one of these individually, but a few notable mentions such as Intel, again, continues to get hit pretty hard, down a massive 22%. ChargePoint still does well at plus 69%. Cleveland Cliffs, I was up quite a fair bit on this and it's dropped down quite a bit, so potentially may want to increase my positions in Cleveland Cliffs. Amazon still up 13%. So I have started 2 new positions, which is Tattooed Chef and Ginkgo Bioworks. I think some of these smaller cap positions have valuations that are really attractive. However, they are much riskier plays. If we go into a much worse economic environment, these stocks are going to get hit pretty damn hard. Although when we go into a bull market, and we will eventually, I think the return on upside on some of these smaller cap stocks is much higher. But again, I have a higher risk tolerance than probably most investors out there. Moving on to the general investment account, the total value of this portfolio is worth £10,049 and still somehow in the green by £49. As with the Stocks and Shares ISA, I put £2,000 cash into this account. I do try to keep cash in these accounts because Freetrade does pay you interest on the cash you keep, and that essentially pays for the plus plan that I have set up with Freetrade. The general investment account, I tend to focus on quote-unquote safer stocks, and I've dollar cost average into some of these positions over the last month. The 2 positions I increased most substantially in this portfolio are Alphabet and Meta, so I put around £500 to £600 into Google, and I do want to build this position up even more if it does drop under $100. And the other position is Meta, so put around £300 into that, and maybe a little bit into some of these other stocks, but not substantially. So that concludes my free trade portfolio updates. So let's do a quick look at my crypto portfolio. Looking at the crypto portfolio, it hasn't changed too much since the last month. The value currently sits at £4,715, and the only rule change I've made is bought another £300 to £400 worth of Bitcoin. I do expect crypto in general to be extremely volatile to the end of this year and leading into next year. So my plan is just to buy Bitcoin and Ethereum when I think some of those prices have come down a fair bit, and I'll just continue to dollar cost average into those two cryptos. So that concludes the September portfolio update. I know it's a painful market. I know things seem to keep getting worse, but I just stick to my game plan and I continue to dollar cost average into companies I believe in. And eventually we're going to come out of this and there will be a bull market. And at that point, I'm probably going to be very thankful that I continued to increase my positions when there was a lot of fear in the market. If you have stayed to the end of this video, I'd like to thank you for watching. Please subscribe and I'll catch you in the next update.